If you have been watching the markets lately, you might have noticed something that feels almost illegal to say out loud. Gold, the forever shiny, always expensive, survival in your basement metal, is dropping in price. Yes, the same gold that our grandparents said would never betray you. The same gold that preppers swore would be the ultimate currency when the world melted down. Right now, it is looking a little less like royalty and a little more like a tired celebrity caught buying groceries in sweatpants. Still valuable, but the spotlight feels different. Before you panic, sell your jewelry, or start digging in your garden for the coins you buried during that late-night economic doom-scrolling phase, let us talk about what is happening. Because gold does not just fall for fun. Gold doesn't wake up one day and say, "I'm feeling cheaper today." When gold moves, it usually means something deeper is shifting in the economy, in the minds of investors, or sometimes just in the giant, mysterious machine we call global markets. For years, gold has been treated like a comfort blanket for grown-ups. Inflation rising? Buy gold. Stocks shaky? Buy gold. Feeling nervous about global politics, recessions, elections, debt ceilings, or the fact that your neighbor suddenly started storing canned beans in bulk? Buy gold. It has always been there, shiny and confident, whispering, "No matter how weird the world gets, I got you." But now we are in a strange moment. Inflation is cooling off in many places. Central banks are hinting at rate cuts instead of hikes. Risk appetite is creeping back like people returning to the gym after the holidays, cautiously optimistic and a little proud of themselves. Stocks are flying again. Tech companies are printing profits like they're 3D printing optimism. Crypto, because it refuses to ever be predictable, suddenly decided to behave like it wants to join the grown-up table. And when investors feel like the world is safe again, they sometimes walk right past gold and go flirting with riskier assets. Think of gold as that dependable friend everyone respects, but sometimes forgets to invite to the party when the mood turns fun. Not because they do not love them, but because humans can be distracted by shiny new promises. Which is funny, because gold is literally the original shiny thing. So now we are seeing selling pressure investors taking profit, people shifting funds to stocks, bonds, and tech innovation plays. Some traders who cheered gold all year suddenly acting like they never knew it. Markets can be dramatic like that. One moment gold is a hero. The next it's a quiet backup singer waiting for its solo again. Of course, the big question floating in the minds of many everyday folks is simple. Should I buy or should I worry? And that is where perspective matters. Gold dropping in price does not automatically mean doom. Sometimes the market is just catching its breath. Sometimes it is positioning for the next big push. Gold historically has a habit of falling, then rising like it remembered who it is. If gold had a personality, it would probably shrug and say, "Relax. I've been valuable for 6,000 years. I'll be fine." But here is the real twist. Most of the world is not selling their jewelry, gold coins, or bars. In fact, gold demand in many cultures is like coffee in the morning or Wi-Fi at the airport. Mandatory. People might complain, but they still want it. In countries, central banks love gold more than social media loves drama. They keep buying because gold is not just a commodity to them. It is a symbol, a shield, a long-term play. They do not panic on weekly charts. Individual investors do panic sometimes. We are human. When we see red candles on the chart, the brain does not calmly analyze macroeconomic data. It whispers things like, "Everything is falling. Sell now, panic now. Why are we breathing?" Buy crypto instead. No, not crypto. Maybe land, gold is old. Maybe AI stocks. Yes, AI will solve everything, including this panic. The human investing brain is basically a sitcom sometimes. That is why we breathe, step back, and remember. Markets move in waves. Right now, gold is surfing a downward one, but waves do not move in one direction forever. So if you are watching the price dip and thinking, is this opportunity or danger? The honest answer is, it depends on your time horizon, your nerves, and whether you are buying because you understand it, or because someone on the internet yelled, "Buy the dip" loud enough to shake your coffee. Gold is not dying, it is just adjusting. The markets are like weather. Sunny one week, cloudy the next, and sometimes a surprise rainstorm that ruins your barbecue. But seasons change, and just as winter eventually remembers how to become spring, markets remember balance. If you already hold gold, do not let temporary price dips shake your confidence like a leaf in a windy suburban backyard. If you do not own any yet and you believe in long-term security assets, dips are often where smart people quietly nod, sip their coffee, and take notes. They do not shout, they do not panic. They observe and plan. And while everyone waits to see whether gold rebounds or dips a little further, one thing remains true. It has not lost its role in the story. Not even close. In a world that scrolls faster than it thinks, gold is still here. Slower, older, heavier. Reminding us that value is not always loud or trendy. Sometimes it is just steady, patient, and waiting for people to notice again. Now here is where things get interesting. When gold dips, the internet turns into a battlefield of theories. Some people suddenly become economists, others turn into amateur fortune tellers, and everyone claims they saw this coming. You'll hear lines like, "It's the Fed," or "It's global liquidity rotation," or my personal favorite, "My cousin in a trading group says whales are manipulating everything." The truth usually sits somewhere between logic and human emotion. Markets move because people move money, and people move money based on fear, hope, and occasionally, TikTok advice they probably shouldn't trust. Let's zoom out for a moment. For most of recent history, gold has acted like a financial seatbelt. You hope you never need it, but you feel safer wearing it. When financial storms hit, people grab gold the way someone grabs comfort food during a breakup. Maybe the situation will not be fixed overnight, but it feels better having it nearby. And just like comfort food, gold demand tends to spike when the world feels spicy. But right now, the world is going through a strange emotional phase. Inflation cooling, rates may be going down, tech innovation exploding like fireworks at a 4th of July party. Suddenly investors feel brave again. Not jump out of an airplane with a GoPro brave, but brave enough to move money into growth stocks, semiconductors, AI plays, and high-yield bonds. When confidence rises, gold sometimes gets parked like a quiet pickup truck in a garage while shiny sports cars take the road. Yet confidence is a funny thing. It can fade fast. All it takes is one unexpected economic report, one geopolitical surprise, one central bank speech delivered in a tone slightly too dramatic, and markets can flip from "we are unstoppable" to "everyone, hold on, grab gold, and don't breathe loudly." Investors are not robots. They are humans in suits clicking buttons based on a mix of analysis and gut feeling. And sometimes guts get nervous.
Meanwhile, everyday people look at falling gold prices and wonder whether it means the world is calming down.
Maybe. Or maybe it just means markets are rotating like they always do. There's a rhythm to money, almost like music. It beats, flows, pauses, rises, falls. And gold is not a meme stock that lives and dies by hype cycles. It is more like a deep drum beat in the background. Steady, ancient, confident. When the crowd cheers for other instruments, the drum does not panic. It keeps time. Some folks worry that digital assets are stealing gold's crown, Bitcoin getting loud again, crypto traders flexing like they just discovered electricity and fire at the same time. And sure, digital assets have built momentum. They feel fast, rebellious, and exciting. But gold has seen empires rise and fall. It watched civilizations build monuments, collapse, and rebuild. It survived kings, wars, financial crashes, and the invention of spreadsheets. Gold is not threatened by digital coins. They can coexist like email and paper letters. One is modern and fast. The other sits quietly, unchanged, strong as ever. And while people debate, nations are buying gold like they are preparing a very serious future. Countries hoarding gold is not a trend, it is a signal. When big players stack something, they rarely do it for fun. They play decades ahead, not weeks. They do not day trade their national reserves on lunch breaks. They make moves when they see long-term value. Meanwhile, retail investors scroll, worry, scroll again, sip coffee, then scroll even more. And every time gold ticks down by $1, someone somewhere whispers, "Is this the bottom?" Trying to time the bottom is like trying to catch a falling leaf exactly where it lands. It might float, it might spin, it might do that awkward flutter that makes you miss completely. Much smarter approach. Understand why you want gold in the first place. If your goal is wealth insurance, a dip is not danger. It is discount season. If your goal is to flip fast money, gold might move slower than your patience level. This is where long-term thinking matters. Wealth is rarely built by panicking at red candles or cheering only when everything is green. It grows quietly, consistently through strategy and calm. Gold fits into that world. It is not glamorous every day, but it is rarely irrelevant. And dips like this, they test discipline. They separate emotional investors from thoughtful ones. People always want certainty, and markets love reminding us certainty is a luxury. The most confident traders in the room are usually the ones who learn to respect uncertainty. They adapt instead of react. They observe instead of scramble. And when gold wobbles, they do not run. They analyze, they ask better questions. They understand cycles, human psychology, and patience. There is a reason why wealthy families across centuries pass down gold. Not trading screenshots. Gold is not there to impress. It is there to endure. Sometimes endurance looks slow, sometimes patience feels boring. But boring is underrated. Boring keeps wealth safe when excitement burns it. So here we are. Gold is dipping, opinions are flying, markets are buzzing, and everyone is trying to predict tomorrow. But maybe the wisest move right now is to remember that gold's story is larger than any monthly chart, bigger than any influencer's prediction, and deeper than any temporary trend. Sometimes value whispers while noise shouts, and gold has always been more whisper than noise. Whenever gold takes a dip, it reveals something fascinating about human behavior. Some people treat it like a sale at a luxury store and walk in calmly, checking quality, thinking long-term. Others freeze like a deer staring at car headlights, unsure whether to run, buy, or call a friend for emotional support. And then there are those who panic as if gold suddenly turned into a useless metal sold next to discount aluminum foil. But history has a sense of humor. Every time people underestimate gold, time has a way of smirking and saying, "Let's see how you feel in a few years." Right now, a lot of casual investors are confused. They hear financial experts on television saying one thing, social media finance influencers shouting another, and that one friend who owns 3 silver coins talking like he discovered a secret economic map. But when you strip away the noise, the core truth remains. Gold is not about fast wins, it is about resilience. You do not buy gold hoping it will multiply overnight. You buy it because it's one of the last assets on Earth that does not need hype to mean something. Imagine the world like a giant financial seesaw. On one side, you have innovation, technology, fast growth, and risk. On the other, stability, protection, and patience. Both sides matter and they take turns being the focus. Right now, innovation has the spotlight. AI is rewriting industries. Tech companies are powering economies like engines fueled by pure ambition. Risk appetite is returning as if someone turned on a neon sign that says, "Future looks exciting again." In moments like that, gold waits in the background, knowing that every economic cycle eventually balances back. Gold is not jealous, it has nothing to prove. It does not chase attention or fight for headlines. It knows the world eventually remembers that stability is not boring, it is essential. When the next uncertainty wave arrives, and it always does eventually, people will rediscover why gold remains a core part of wealth strategy for individuals, institutions, and governments alike. Not because gold rises during doom, but because gold provides peace when the world forgets how to breathe calmly. There is something poetic about gold. It has no CEO, no earnings report, no marketing campaign, no charismatic founder giving keynote speeches. It does nothing, yet it represents everything: strength, value, permanence. It is like a stone lighthouse on a restless shore. Waves crash, storms roar, seasons change, but the lighthouse remains. Not panicking, not bragging, just existing with purpose. For investors paying attention right now, the question is not, why is gold down? The better question is, what story is the world telling and how does gold fit into the long-term picture? Gold fits like an anchor. You do not notice it when the sea is calm. You appreciate it when the tide turns. And even in calm moments, smart sailors do not throw the anchor away just because the water looks peaceful. Calm seas are not guaranteed seas. There is also a practical truth most seasoned investors understand. Buying fear often pays better than buying excitement. When the crowd rushes in, price follows emotion. When the crowd steps back, opportunity quietly appears. Gold dipping is not a red alarm. It is a reminder that patience is a strategy, not a weakness. Think of the wealthy families across centuries, dynasties, merchants, empires, generations who never had TikTok experts or stock market apps. They still held gold. They didn't do it because they lacked imagination. They did it because they understood longevity. Wealth that lasts rarely depends on the flavor of the year. It depends on discipline, preservation, and balance. And that brings us to everyday viewers watching gold right now, sipping their coffee or scrolling through market charts in bed. What matters is not predicting the bottom or chasing the perfect entry. What matters is learning how value works, how cycles breathe, and how patience builds strength. Gold's dip is not a warning siren. It's a quiet teacher whispering the same lesson it has taught for thousands of years. Nothing valuable loses meaning because of a moment. If you see gold dipping and think, what now? Consider this. Sometimes the market's most important signals are not loud movements upward. They're moments when calm investors quietly prepare. The world changes fast. Headlines rush, trends explode, fear and hype dance together like they always do. But deep value does not sprint, it walks, steady and confident. Gold dropping is not the end of its legacy. It is simply another page in a very old book. A book written in civilizations, currencies, wars, trade routes, economic revolutions, and human hope. And unless history suddenly stops being history, that book has many chapters left. Gold does not scream for attention. It waits, and those who understand that rarely regret listening.